Thanks for making this a Veterans Info Tap. I'm glad you made it. Look, today I wanted to talk to you about state benefits, and really I'm focused in on the real estate tax exemption for disabled veterans. Now, whether you live in this state or not doesn't matter. It's about the awareness piece. If you don't live in this state, then you can utilize this information to share with your state representatives if your state does not offer 100% tax exemption for your military disabled veteran status. So let me jump into it here. I'm going to share with you this information. I'm just going to kind of peruse through it, give a couple of little snapshots. Hit the thumbs up for me, subscribe, share with a friend, all that good stuff. I appreciate it. And again, if we don't take action on things, action will never happen, right? We can't sit around and wait for somebody else to do things for us, right? We enjoy all the benefits that we have today because the men and women before us, veterans, leaned forward and paved the path to get us what we have today. It's our job to continue that and forge ahead to leave it for those that come behind us, right? And hopefully we'll partake in it along the way, right? So let me jump into it here. This is the state of California, and this information came through one of the comments, and I can't remember the handle off the top of my head, and I don't want to fumble around and try to figure it out. So thank you for mentioning it. I appreciate it. Chime in this video in the comments because you know who you are. You mentioned this piece of legislation. So this piece of legislation, which is Senate Bill 726, if you're in California, you want to contact your state Senate representative and let them know that you support, if you do support it, the Senate Bill 726. Okay. If you're not in California, then listen to this information and you could share this with your state representatives, whether it's assembly or just representative or whatever they're called in your state. So let's jump into it here. This piece of legislation is to amend the property tax exemption. So in California, there is already a property tax exemption that, depending on where you fall, it used to be $100,000, then it changed to $150,000 if it's lower than a certain income threshold. So there's like a low income and then a regular, and then over time there's kind of a cost of living like a adjustment to that as well. Every year it moves a little bit. Last that I read, there was something around maybe 160 or 170 off of the assessed value. Well, anybody who has any idea knows that $160,000 off of your $1 point whatever million house in California is not going to do much. So this is going to change some of that, and I'm going to read to you here some of the amendments is what's being proposed. So when you already have a tax exemption policy or law in place, you don't necessarily have to scratch it and do a whole new one. You do amendments to it. So on this one, they added in, they did some striking to strike out things, and then they added in, and I'm not going to bore you with all the strikeouts, but I'll just tell you what they're changing it to. Shall be exempt from taxation on that part of the full value of the residence that does not exceed $863,790. as adjusted for the relevant assessment year as provided in subdivision E if all of the following conditions are met. So in other words, you would be tax exempt up to that dollar amount. So if you live in a $8 million house, well, they're not going to give you full tax exemption, but they'll exempt up to $863,000 of your house. So if you bought your house a few years ago and now it's worth $1 million or 1.2 million, and you owe 750,000 on it, then and that's your assessed value. That could be exempted, which is nice. So here it says the property is owned by the constituents let's see. The property is owned by and constitutes the principal place of residence of a veteran, the veteran's spouse, or the veteran and the veteran's spouse jointly. So that's one of the qualifiers. The veteran is blind in both eyes or has lost the use of 2 or more limbs as a result of injury or disease incurred in military service and the disability rating by the United States Department of Veterans Affairs, or the military service from which the veteran was discharged is 100%. Or the veteran is totally disabled as a result of injury or disease incurred in military service. So in other words, a 100% rated veteran, right? Service connected at 100%. So totally, in VA's words, is 100%. It mentions nothing about permanent. So it's just reaching the 100% threshold. And I would assume that that would also include TDIU. And if you're in California, I would encourage you to, while they're working this law, to make sure that it includes TDIU. Let's see what other changes. Person other than a member of the deceased veteran's family as defined in paragraph of let's see. The property is deemed to be the principal place of residence of the unmarried surviving spouse of a deceased veteran who is, or of a deceased veteran who is confined to a hospital or other care facility if that property would be the unmarried surviving spouse's principal place of residence were it not for their confinement to a hospital or other care facility, provided that the residence is not rented or leased to a person other than a member of the deceased veteran's family as defined in okay, so basically if the veteran passes away and the spouse, the surviving spouse, is in the home or not in the home, in a care facility somewhere, then the home could be occupied by a member of the veteran's family as described or defined in paragraph 4 of subsection C, which I'm sure is probably, maybe a ring or two out. Let's move on and see what other changes. I don't see any other changes. So the big change is exempting up to $863,790 of taxable home value, right? So remember, after you purchase a house, when you purchase a home, that's your value. Then every year that goes by, there's an assessment done on the home. The value of the home may move up more rapidly than the actual assessed value because for many states there are limitations to how high or caps on how high they can assess your value over the last year's amount, which saves you. So again, it would be $863,790 off of the assessed value of the home. So great bill, good information. Again, it's Senate Bill 726, and it was introduced by Senators Archuleta and Grove in California. So thanks for watching. I appreciate you. Glad to be here sharing information with you. Please take it, use it, and share it with other states' representatives to try to get more states on board. Remember, we bring in millions and millions and millions, and in a lot of cases, billions of dollars into the state ecosystems. California, for example, brings in a little over $9 billion a year in VA compensation alone. Texas is $12 billion. They're already fully tax exempt, but you get the picture. So lots of money the veterans bring in. The least they could do is shave off a little off the taxes on the real estate side for you, so that way it frees up your money to spend it in the state on other things, supporting small businesses. All right, anyway, thanks for watching. I appreciate you. Have a great one. And remember, if we don't take care of each other, something went wrong.